gonna be showing y'all my favorite strategy called the break and retest strategy. Now, this strategy, although I use it mainly for day trading, I mean it works the exact same way whenever you are swing trading, right? You only change the time frame. So that's one thing that I love about, the kind of the way I trade is pretty much anything that I call can potentially be a swing, even if it's just a day trade. Um, Simply because I love to start with the higher time frames, and we'll get into that and how you tie that in. Gonna try not to be too long with it. So let's go ahead and get started. Um, every time I'm talking about trading stuff, I don't like to do like presentation styles. I don't know why. I hated presentations in school, so I don't typically try to do them. Unless people kind of request them. So um we're gonna be talking, and it's not a freestyle, but I don't have a presentation for you to see. I'm going to be talking, and I'm also going to be kind of showing you a live view using TradingView. So that's how I'm going to be showing y'all today. Let me pull up TradingView right here. Pull up TradingView, and y'all just let me know whenever you can see it. Let me know whenever y'all can see that. Okay. All right. Let's say we're good. Let's say we're good. Cool, cool. Okay. The break and retest strategy, right? So what is this strategy? Like why do you trade it? So you guys know I love to trade like patterns. Like I love flags, triangle patterns, all those different, head and shoulders, all that kind of stuff like that. But there's also another side to that in another way to kind of look at that. So when you're trading patterns, you're looking for a breakout, right? What I'm gonna be doing a lot of drawing and erasing. So y'all just bear with me. So for instance, you look at something like this would be like trading a pattern right here. This is a bull flag pattern. And you know that you're looking for it to do a little something like this. You're looking for the stock to kind of bounce in here and take off to the upside, right? But what will sometimes happen? Sometimes what may happen is you may get in right here, and let me know if you guys have had this happen to you before, because I mean you probably have. You get in on what you think is a breakout, and it ends up faking you out, and it comes back down, hits your stop loss, you lose the trade. Let me know has that happened to you. Yep, we got some quick yeses in there, so that that don't happen to everybody. Of course, it don't happen to everybody, right? So I'm gonna show you guys. I feel like this strategy is a little bit safer than playing patterns, and it may even be more high probability, right? And to trade this, I'm gonna tell you what you need to trade this. So you guys know I have like pillars, right? So I have pillars that I live by with my trading because I always felt that no matter what strategy you trade, you need to know about some things, right? And a couple of those things are, like volume, levels or key levels, or supply and demand, whichever one you want to do. Um, patterns, understanding time frames, understanding candlesticks, right? So to trade the breakout and retest, the things that you need to have a great understanding of is you need to understand candlesticks. Number one, you understand candlesticks. You need to also have a great understanding of key levels and volume. If you can understand those three things, that is essentially all you need to trade this strategy. Make sure I'm not forgetting anything. Candlesticks, volume, key levels. That's it. You need to understand those three things. That's all you need to understand how to trade this. All right. So let's talk about what is the methodology behind this, right? So candlesticks are important because each candle tells you a story, right? And usually, the name of the candle is not important. It doesn't matter what the name of the candle. You got a dragonfly, you got all kind of candle names. I always tell people when I teach them, I said, it doesn't matter what the name is. You need to understand what the candle is telling you, right? So when you have a long wick to the top, that means that during that candle, whatever time interval that is, the sellers were able to step in and take out the buyers, right? When you have a long bottom wick, that means that the buyers were able to step in and push out the sellers, right? So you're looking for how the wicks are forming. If it's no wick, then it is a solid, it's strong in the direction on which that candle is going, right? So you need to understand candlesticks. It's not important about the name. It is important to understand what does this candle tell me. Don't get caught up on the name, right? I promise you, I don't even know every single candlestick name, but I can tell you exactly what it means, right? All right. So you need to understand candles. Number two, you understand key levels. So what are key levels? Key levels are places on the chart where a stock has had trouble going above or below, right? And for me, the strongest levels are those that you're going to find on the daily and on the weekly. Those are the two strongest, but I promise you'll be fine with just finding those key levels on the daily, right? So you want to at least find the key level on the daily, and it needs to touch at least 3 to 4 times, right? So you need to find a level, which a level is just a support or resistance that stock has touched at least 3 to 4 times. That makes it a key level. All right. So I'm going to be drawing kind of while we're talking, right? And I'm going to do I'm going to be doing demonstrations here. So, kind of bear with me. So we need levels, we need the candlesticks, we need to understand volume, right? So when you're trading, people always say, well, you need to watch the volume. Usually when you see something break out, you want to see volume when you have a breakout, right? You usually want to see volume. But what if I told you that when you're trading this strategy, if you're trading the pullback, because that's essentially what you're doing, you're trading the pullback, you're looking for a decreased volume. So what this thing is going to look like, it's going to look something like this. Let me delete all of this right here. It's going to look something like this. The stock may do this right here. It may break. It should come back and, go up from there. So what are you looking for? Once you find that key level, you are waiting. You're not chasing this up move, right? So we just talked about how a lot of times if you play a breakout, unless it's a super strong breakout, which, we're going to talk about that in a minute too, usually this thing is going to give you some red candles, or, if you're taking a downside break, it's going to give you some green candles back to the upside. Let me know how many of you have taken a breakout and you got scared because you're seeing an opposite color candle and you got out just to see that the trade ended up going your way. Yep. Of course. Of course. It's happening to everybody. It's happening to everybody. Right? So this is going to be a safer strategy for you when you're day trading. So you want to have a key level. And let me also say this about key levels, because this is super important in my strategy. Key levels give you they let you know how much room you have before you can expect this stock to possibly start struggling, right? So key levels for me are on the daily, the weekly, and you can also incorporate the 4-hour, right? But what tells you whether you want to get in this trade or not is you need to see, well, how far is this key level where I'm looking to get in to my next key level, right? And it also depends on the stop. So let's take this for instance here, right? So we're looking at spot, right? So let's say I have a key level at 430, and then I have my next key level at, let's say I don't have another key level until 438, right? Let's just say that, for instance, is $8 enough room for me to possibly make a profit on spot? Yes, it is, right? So it's enough to make a profit. So that would be a good potential play because you have enough room for your contracts to work and for you to make a profit. Let's say if we have a level at 430 and then we have another key level at 430.55. Well, it wouldn't really make sense for me to take the trade at 430 since we have another key level so close. Let me know if that makes sense. Let me know if that makes sense. Said yes. Cool. All right. Now we're finna throw a wrench in there. It also matters. It also matters what the stock is. So that 50-cent move on spot, unless you're trading like 0 days or 1 day expiration, you might not want to take that. You know, if you're trading zeros, you catch 50-cent move, you'll be perfectly fine. But most people don't trade those. So let's say we're trading something. Let's change the stock up. Let's say it's American Airlines, right? So let's take a look at American Airlines. So now this is a whole different stock and it moves different. Now, if we look at American Airlines and we say, okay, well, I have a key level here at 1201. My next key level isn't until 1259. So that's a 50-cent move right there. But now, is this 50-cent move enough for you to make a profit? Is 50 cents enough for you to make a profit on American Airlines? And you have to think about here, how much do the contracts cost? The contracts on American Airlines, you know, they are a lot cheaper than those on spot, right? So that means you don't need as big of a move on American Airlines as you do on spot. A 50-cent move on American Airlines will give you a lot more than a 50-cent move on spot if you use the exact same amount of money. Let me know if you guys understand it. And that doesn't have a whole lot to do with trade. That's just basic understanding of options and kind of how they move with certain stocks. All right, cool. Okay. So that is always super important. Before you even get into a trade, before you even look at trading, you need to ask yourself, does this trade make sense? Does it make sense for me to take this to the upside or to the downside? Right? So you need to understand where are my key levels, and you also need to understand the overall market direction. Right? So if I know that above 12, American Airlines can go to 1250, but I know that the market is in an overall downtrend, you wouldn't want to take that break and retest because that will probably end up being a fake out, right? So that thing could come back and look like a retest, but then it may fake out. So you want to do, when you're using this strategy, make sure you're trading with the overall market direction. That is going to reduce your chance of getting faked out even more. This strategy is super, super good because the risk management on this strategy is great. And you have super, super clear stop losses here, right? So I'm about to show you guys, how to incorporate this in your trading strategy. All right. So we talked about the things you need to understand. We talked about you need to know the overall market direction. Now let's start talking about how do we trade this thing? What do we want to see? What are our targets? What are our stop losses? That's literally all you need. All right. So I'm gonna actually show you guys. We're gonna find. I wasn't gonna do this example, but we're actually gonna. I'm gonna show you guys this right here because we traded this not too long ago. Not too long ago. If I can find it here. Can't find it right now, but we traded Microsoft last week. I think it was last Wednesday or last Thursday, and it was an amazing example of this break and retest. Um, I can't see where we was at here. Actually, here we go. Okay, here we go. Okay, so what did I say you needed? I said you needed a key level, right? You need to understand the volume, you need to understand the candlesticks, right? And you need to understand the overall market direction. So if we was to look here, and this is actually was a level on the daily, I didn't have it labeled, which I usually do. We look at Microsoft here, and even though, even if you didn't see this on the daily, it's 3 straight days. Like we're looking at the 15, even if I went to the 5, the 15, the hour, you would see this 3 straight days of resistance right here. 3 straight days of resistance right here, right? So all we're looking for, you're looking for this thing to break, and you're looking for this retest candle. So when you're trading this type of strategy, you're not chasing the initial move. You can take the retest. You actually have a couple retests here that you could have taken, right? So you don't chase the initial break, because many people may take this initial break right here and they'll sell right here because they're saying it's going down, because this candle tells you that at one point this was a red candle, right? Now this is a live trade that we had took last week, last Thursday. So let's talk about the reasoning once again. We have multiple days that this level has been a place that it could not break. All right, cool. We got that part. We got the level. Now we're looking for the candles, right? So we're looking for the break. And this is important to note as well. On the retest won't always happen the next candle. Sometimes the retest doesn't happen until it gets back here. You may have some trades that go just straight berserk and leave you, but that's where you have to have the discipline. You don't want to get the FOMO. You want to wait until that trade comes back to your level. You have to have the discipline to wait. All right. Now let's talk about entries on this. What are we looking for to get in? Once we have our level established right here, 3 straight days of resistance. Once you have your level established, you're waiting on this thing to break, and then you're looking for a candle to essentially dip under the level or get right there at the level and form a candle that lets you know that the direction is going to continue. Because let's think about support and resistance here. Support and resistance, those are just levels that buyers and sellers are sitting. So if you're looking and you're saying right here, boom, this is a place that the sellers have won 3 days in a row. Cool. Now, what you're looking for is the buyers have pushed it right back up, but who's to say that the sellers could not have pushed it back down, right? And you're always thinking in terms of probability. This candle tells you, what did we talk about earlier? Long bottom wicks tell you that buyers are pushing out the sellers, at least for this time frame, right? So for this right here, this candle was the breakout. This candle was the retest. So sometimes your candle will retest the very next candle. It doesn't happen like that all the time. But this basically has flipped from a resistance to a support right here, right? So now, let me know if that makes sense. It doesn't always happen that next candle, but many times it does. This is a live trade that we took last week. Let me know if this makes sense. We got our level, we got our break, and we have our retest right here. Let me know if that makes sense. Okay, cool, cool. All right. So if you're looking to trade this to the upside, when you're looking to take a retest to the upside, you're looking for bullish candles, right? You're looking for bullish hammers. You're looking for bullish engulfings. You're looking for those types of candles if you're looking to take a break and retest to the upside, right? So you got the break here, a tough level. You have the retest. Now, it says, on what time frame should we look for retest? We're going to get that in just a second. That's a great question. Now, for this example in particular, this trade it was harder to give you, a profit target here, just simply because at the time, this was the all-time high. So this trade was literally, you know, you're taking profit when you're comfortable on this because there was nothing to give you as far as a target here, you know. But usually targets can be the next key level, targets can be previous day highs, you know, it can be anything like that. We're gonna talk about another example that I'm gonna show you that we will be targeting, you know, the previous day's highs and things of that nature. Um, Stop loss. What is the stop loss on here? And this is a great thing about this strategy. The stop loss is super duper simple, right? So if we are getting in, if we're looking at this here, we're looking for the retest count. Boom. I want some people to take a guess at what point does this not work anymore? At what point does this not work anymore? If I get in here because I seen that it retested the level and buyers stepped in, at what point do I say, okay, buyers are really not? And it is no, you know, we're gonna just take some guesses here before I give y'all the answer. This is why I love this strategy so much. The stop loss is insanely simple. Exactly. Exactly. So, yep, y'all are getting it right. So, with this break and retest strategy, the way I do mine is it's a one candle stop loss, right? So, if we break below this candle, that tells me that this is no longer working, right? So, this is a super simple stop loss. You should never have a huge loss on a break and retest type trade. Never. Even here, this is from 373.37 down to 372.49, right? And that is on the bigger side because this, you know, Microsoft can move pretty fast now, right? But usually this candle is not even that much, right? So it's a one candle stop loss. And what I like to do, you know, if I had levels to the upside, this is something that I incorporate a lot more into my game that I do now than I used to, is using this tool right here, long position and short position, right? You use the long position whenever you are looking to take something to the upside, and short position when you're looking to take something to the downside. So let's just say, for example, and this can tell you, will this trade be worth it or not? You have to know, will this trade be worth it? So let's say if we had a target on Microsoft at 377, right? So let's say, for instance, if that was an all-time high, and 377 was the next key level, what could our risk to reward be? Now, when you trade, you always want your risk to reward to be at least a 2, bare minimum of 2. Some people say 2.5 to 3, you know, but you want it to be bare minimum a 2. So if we look here and say, okay, 377 is the next key level, this is my breakout, this is my retest. I know that my stop loss is under the candle. And this is another little secret. Don't think that you're the only one that knows about this strategy, right? So a lot of times what I like to move my stop loss a little bit below the candle, right? Because a lot of times it will wick right here and keep going, right? So if we look here, this risk to reward will be a 2.71, right? Just depending on how far this thing can go. That's why I say you need to understand levels. Because let's say that the next key level was at 374.4. And I took this breakout and retest right here. And this key level right here, now my risk to reward is a 0.72. It doesn't make sense to take that trade, right? Let me know if this makes sense. Let me know what makes sense, what doesn't make sense so far. Let me know what makes sense, what doesn't make sense. Right? Say the risk. Yep. Can you explain it one more time? For sure. For sure. I'll explain it again. And explain it again. Got another good question right there. It says, since it didn't go to the key level, when would you get out? right? So on this particular trade, we didn't have a key level because it was the all-time high. But I mean, when you're into a trade, you don't want to always just keep on, hold, especially when you get deep in profit, especially a move like this. Like this move is 372 to 377. Like you want to take something off the table. Then you want to start moving up, your stop loss as you go along, especially when it's a huge trade like this, a huge potential trade. You want to move up your stop loss, when you start coming up. You don't want to let this thing hit 376.99 and come all the way back down under here and stop you out. Because you'll be deep red by the time it gets back here. So you want to move up your stop loss as your trade starts running, but you always want to give it time to work. Give it room to work. Because if you don't let your winners win, you're gonna do nothing but pay for your losers. Can you explain it again and the risk to reward? Okay, yeah, for sure. All right. Will you teach how to place the stop loss? Yep, for sure. Okay. So let's walk through it. We're looking here, right? And for one, we always break things down, uh from top to bottom, larger time frame down to the smaller time frames, right? So if you look on your larger time frame, we're gonna look at what it was doing kind of at the time, right? So let's look at what it was doing at the time to show you guys why I was watching it in the first place. So that day was this Thursday, right? So the day I was seeing it was right here, the 15th, right? And this day, it was at all-time highs. So it was already at all-time highs and the market was bullish. All right. So that is why it was on my list. So as you kind of looking at it, once you come throughout the day or that morning, because you got to prepare, plan, execute, right? That morning, noticed, here we go, let me zoom in. That morning, going through the pre-market stuff, noticed that, hey, this has had a place the past 3 days that it has been rejected. Very nice. We got our level. So using the break and retest strategy, I was like, okay, well, we need to look for this thing to break and wait for the retest count, right? But you don't want to get in on any type of count, right? So you want to get in, if you're looking to trade to the upside, you're looking to get in on bullish retests. Take note of that, please. If you're looking to take a break and retest to the upside, you need to get in on bullish retest candles. Long bottom wicks, bullish engulfings, those candles like that. You're looking for candles of that nature to get in. You don't want to take this thing and it's doing this right here, right? Because if it has this, you're waiting for the buyers to step in. This is not telling you that buyers are stepping in. None of this is telling you that buyers are stepping in until you get back down here. So even if we would have missed this right here, remember I said you don't got to chase. You don't supposed to chase. Look what happened when this thing ran and it came back. So even if you would have missed this part, we did let's do the risk to reward again here, right? And remember that I said at this time, it was hard to do the, take profit because all of this is all-time high. All this was all-time high right here. So it was hard to do a all-time high, take profit. It's hard to tell you where to take profit at all-time high. But for instance, let's say we had a level at 377. If we was to look right here and we know we was looking in to get, right there at the candle close, if we look at our risk to reward, if I know that this level to my next key level is 377, so I know it has a potential to go here. I know my stop loss will be right here under this candle. So I'm risking $1.04 to possibly make $3. Possibly make $3.68 relative to where the stock was at, this time right here. Changes when you start moving. Right? So this is above a 3 risk to reward. So the stop loss is simply under one candle. because you're getting in on this one candle. And I might even change the name of this. I might call this the one candle day trade. I don't know. I'm gonna change the name of it. I'm gonna give it a 5 name for y'all. But, I love this strategy because the stop loss is always one candle. It's always one candle. You should never have a huge losing trade when you're trading this type of strategy. If you're doing this while you're trying to trade some 0 days, then maybe you will have a bigger loss trying to trade a 0 day with $1, stop loss. But most people don't do that. So the stop loss is always under the retest candle, and you always want to give it a little bit of room. You don't want to let it come all the way down here. But if the candle ends here, then maybe stretch it out, 10 cent, 15 cent, whatever. So let me know if that makes sense. Let me know if it makes sense. And then we'll walk through what it would look like if we was to take it here, because this was another potential entry. And now, if we was to look here, we actually would have some take profit areas. Let me know if that made sense, that we just went through it again right there. All right. So let's say you missed this initial move. Something happened. You had a work call. You said, dang, I missed the move. I missed it. This thing, let's say if you seen this thing, it was all the way up here. You said, dang it, I missed the move. You did. You don't want to chase it. You're looking for that retest, right? Because when we look at this. So this thing was a resistance for 3 days in a row. So why don't you think that it can become a support for one day? All you have to do is wait for it to come back. And this is the thing about this strategy. You might not even get a trade. You don't always get a retest. There have been plenty of times where I've called, hey, watch for this retest here. And we never got that retest. And you have to be perfectly fine with that. Because this strategy, the probability of winning with this strategy is so good, and the risk to reward is typically so good. You don't have to worry about if you are going to miss this trade or not. You just want to let the trade come to you. This is a great strategy simply because you're never going to be buying the top. You're never going to be buying the top, because think about what you're doing here. With this type of strategy, you're in a sense, unless you're getting a one candle retest like this, you're buying low and you're selling high. When you're trading a pattern break, you're basically buying high and selling high. Or if you're playing puts, you're buying low and selling lower. Right? So let me draw that out for y'all real quick. So I told you I wasn't gonna hold y'all long, but I do have a little bit more I want to say. Okay. Bull flag pattern. Boom, boom, boom. Breakout right here. You're looking to buy here and you're looking to sell up here. So you're buying high, you're selling higher. This strategy, we let the initial move happen, we wait for it to come back to the level, and we wait for our bullish confirmations. We're buying low, we're selling high. Right? So let's take a look at this right here. This would have been even better. Let's look what happened. This thing took off. You missed it. Cool. But you knew this was a key level. So one thing that I always tell people too is I hate sitting here staring at the screen. I hate it. I put in a lot of screen time looking at this stuff, trying to learn this stuff. I hate looking at it now to the point where I just look at it all day. I can't do it anymore. So I love to set alerts. Set alerts. If you know that this thing is running and you know that the retest level is here, set an alert for like 373, right? You want to give yourself time to see what's going on here, right? So set alerts. Set alerts before it gets to the level that you're looking to retest. Okay, cool. Now, let's talk about what do you do if it comes back and retests during the day? Because this is what you're going to see a lot, especially when you understand the market direction. We know that the market is bullish, right? So we are more comfortable taking a retest to the upside. If the market was bearish and something was coming down like this, you won't want to take it. All right. So I always play with the overall market. But we're looking for bullish type candles. So, okay, quick quiz right here. Is this candle bullish or bearish? This red candle. Someone tell me, is this red candle bullish or bearish? Okay. I got some people saying bullish. I got some people saying bearish. All right. Why? Why do you guys think it's bullish? Why do you guys think it's bearish? Okay. It says long wick. Long wick. Now, this is something that I love to tell people too. Now, just because a candle is red doesn't mean that it is bearish. This candle is actually bullish because it has a long bottom wick. Now, this bottom wick isn't as long as this one, but it has a long bottom wick. So when you see and notice, what is this level? This is the same place. This is the same exact place. Let's zoom out. When in doubt, zoom out. This is the same place that it was a resistance the past 3 days. So it broke out, and now it's coming back to retest. If you missed this retest, cool. It gave you another opportunity. So now let's talk about take profits. So if this was the all-time high, you actually do have places where you want to looking to take profit. You can set your target at high of day. At this point, this was high of day. And you could even come down a little bit lower than high of day if you don't want to risk getting wicked out and, things of that nature. But typically, you can put it at high of day. If it breaks through your level and it comes back, you can put your take profit at high of day. Now, if we bring out the tool here, long position, bullish retest candle at our level, look at the volume, right? So look at the volume here. When it was breaking out, look at the volume. What do you guys notice about the volume on this pullback? How is the volume on this pullback? Volume analysis. What do you guys notice about the volume on this pullback compared to when it was pushing? Low. Yep. Weaker volume. This is another great question. So even though the long wick is red, it still represents buyers. Yep, exactly right. So it always matters about what those wicks are doing. If you have that long bottom wick or long top wick, that's going to tell you what's going on. Like for here, instance, green candle, but this candle tells you that within this 5 minutes, Microsoft was all the way up here at 374, but the sellers came and pushed it all the way down to 373.8. So it's always about the wicks. So we got a retest candle right here, bullish retest candle. Cool. Where did we say we can place there or take profit? Now, this is going to happen. A lot of you don't trade early like this. So this is more likely what you're going to see a lot of times, right? You're going to let this thing run and then come back to your level. You got it here. So what can you say here? Your target is up here at high of day. You can do your stop loss. Remember, you don't want to put it right here at the candle, because if we put it right here at the candle, you would have got stopped out right here. Y'all see that? You would have got stopped out right here. You want to put it, a little bit below. You want to give it a little bit of room, especially when you have a risk to reward like this. This was a 6.17. I'm sorry, 6.47 risk to reward. 6.47. So if you were risking $100, you could have possibly turned this to $600, right? So this is a 6.47 risk to reward right here. Okay. Now, if you look here, you would have got in here. Boom. How many of you probably would have sold? And be honest right here. How many people would have probably sold on these dips? Be honest. Because this is something that I know I would have. I know I probably would have. In my earlier trading days, I definitely would have. Right? But that's when that psychology comes in. You want to let your trade play out. Your risk to reward is a 6. That is an insane risk to reward, right? You want to always let your trades play out, right? You got into that trade for a reason. Make it take you out for a reason. I guarantee you, in the long run, you're going to be a lot better off if you let your trades play out than if you keep cutting yourself short. Because what's going to happen is you're going to have that big loser, and then you're gonna see a couple green and be like, oh man, I don't know if it's gonna keep going. Let me sell it right here when it went up $1, and this thing ended up going all the way to the target. Right? Trade played out perfect. Does it always happen just like this? No. But you have to let your trades play out. And that is something that's super, super important with this strategy. You have to let your trade play out with this type of strategy, right? Once you set your stop loss, you put it a little bit below. Make this thing come down here and take you out. It may take you out a few times, but I guarantee you, in the long term, it's a marathon, not a race, right? Let this thing do this, all this right here. Cool. You're not out of the trade yet. It's not, sellers aren't really stepping in. And even with this thing keeps dipping, look at your candles. Look how your candles are closing. You have 1, 2, 3, 4 bullish candles right here at this level, right? So would you be down on your contract right here? You might. You might be down just a little bit on your contract right here. But what are the charts telling you? The charts are saying you good. Listen to the charts. When you find your plays, are you finding your plays by how much the contract is, or are you finding your plays by off of what the charts are telling you? Y'all let me know. Are you finding your plays because of how much a contract is, or are you finding your plays by what the charts tell you? Charts. Exactly. So let yourself get taken out of your trade because of your chart. Let yourself get taken out because of your chart. Especially if you're someone that buys a little bit of time with day trades, man, I promise you'll be fine. Let these trades play out. If you don't let your winners win, you are going to be doing nothing but paying for your losers every time. I promise you. Right? So this was a perfect example right here. It broke out. Even if you don't like the trade in the first 15, 20 minutes, cool. It came right back down. Right? And you played around here, never hit your stop loss. Had a $3 possible move to the upside. Risk to reward was there, and it hit target. Simply off of understanding levels, volume, and candlesticks. This happens every day. Every day, stuff like this happens, right? And it's the job as traders to not overcomplicate this stuff, right? So I'm only using 3 things to find this trade. 3 things. That's it. We haven't talked about indicators. We haven't talked about RSI. We haven't talked about, I love to use the Ripster clouds. We haven't talked about none of that. All right. 3 basic concepts. A whole day trading strategy just off of understanding key levels, candlesticks, and volume. That's all you need. So we got a question here. How do you determine your stop loss? The stop loss is a 1 candle stop loss. So once you, for instance, to the upside here, so this trade is to the upside, which most of these things are because the market has been going up. This is the first bullish candle here that we had. It retested this level, right? So it actually dipped under the level and got pushed back up. So that was even better. So our stop loss here will be under this candle, right? So, and you don't want to put it right here at the candle because you will get wicked out a lot of times, just like this. Sometimes you won't, but many times you will. You want to put it just below, just below. Give it a little bit of room. So the stop loss is relatively small, while the reward was huge. Now, how does that stop loss differ from trading breakouts? Now, this might sound like I hate breakouts, but y'all know I love to play breakouts. That's my bread and butter. Let's look at how they differ and why this could be a better strategy for you, especially if you really prioritize risk management. So when you're getting in, all right. So let me ask y'all something here. All right, you're looking at a bull flag, and you're looking to get in somewhere around here. Cool. Where's your stop loss right here? If you're trading a breakout. Now there are methods to do it, but I just want to use this instance for people that may not know. Where's your stop loss? If this was a bull flag on Microsoft right here, where would your stop loss be? If you was to get in right here, let's say this is 373.8. Cool. Where would your stop loss be? Under the trend line. All right. Bottom of the flag. Okay. So now we okay, see? Okay. I like that. So I like what just happened right there. So we got a person that said upper trend line. Cool. Bottom of the flag. Okay. Now, if we use our tool here, let's say the breakout we got in right here. And just for the sake of argument, let's say our target was, I don't know. What can our target be? Let's say our target was like 375, right at 375. We said one stop loss was right here at upper trend line. So let's put it a little bit below. This one's a 4. Under here. Let's bring it a little bit below. Now it's a 1. You see what I'm saying there? But in reality, check this out. In reality, neither one of those are wrong. Neither one of those stop losses are wrong in reality when it comes to trading patterns. Because what can happen is, let me take this off. I hope I don't lose a couple of y'all here. When you're trading a breakout, this thing could fake out right here, come back to the bottom of the flag, and then push up. But do you guys see the difference? The huge difference when it comes to how much you're going to lose. So if you're doing a stop loss like this, you might get stopped out quick, and this thing might come down a little bit lower, get back in the flag and push. Whereas here, your stop loss down here, but now your risk to reward doesn't even make sense anymore. Let me know. Let me know how we feeling. You said, what's the name of this tool? This tool is called the long position. You can find it on the same, it's like the 1, 2, 3, 4, the fifth one down on the 5th row. So this is a reason why I love trading breakouts, but I love to, and this is gonna have to be another class. This is gonna have to be another, session. But I love trading the breakout on the larger frame and getting in on the smaller time frame. That's a whole nother, that's another talk for another day. It's gonna get confusing if I start talking about that today. I ain't gonna be on too much longer. They've been about an hour now. I ain't want to have longer than an hour. And I'll probably have to make another couple short videos to sum up everything. But basically, let's review. All right, let's review. Break and retest. Break and retest, you need key levels, understand candlesticks, understand volume, right? So you need to find where's my key level, all right? Now, I love to find the trades from the daily. So let's just say, for instance, let's say that you notice that this stock is getting up to a level that it hasn't been able to break for the past 2 months. Let's say it's been getting right here for the past 2 months, and it's been doing stuff like this, right? Cool. And let's say we have another day that is near this level again on the daily. We're near it on the daily. We know that we haven't been able to break this for 2 or 3 months. We're on a daily. We see that. Cool. Now, we come down to the 5 minute, 15, whichever time frame you use. I use the 5 minute. Now you're looking for it to, where did I put that? Here it is. Now you're looking for this thing to break, retest, right? And if you have levels to the upside, if you have key levels to the upside, those are your targets. If you have levels to the upside. If it's at all-time high, then it's harder to tell you what level. All right, and we're gonna try to find an example here before we get off. Yep, what's the name of the tool? Yep, long position and short position. It's the 1, 2, 3, 4. It's the fifth row. Fifth row. All right. So that's break and retest, right? So that's the what you're looking for. Entry criteria. Entry criteria is bullish candles. Bullish candles, and you want to trade the overall direction of the market. If this thing has been in resistance for the past 2 months and SPY and QQQ have been bullish, then you're possibly looking to trade this more so to the upside, right? And it works the same exact way to the downside, same exact way we was talking. Now you just flip that on its head. Then you're looking for bearish, candles, bearish retest, which that happens a lot as well. Entry criteria. We're looking for it to break. We're not chasing. This is a anti-FOMO strategy. Don't chase the initial up move. Let it come back and retest. That candle retest could be the next candle. It could be 30, 45 minutes to an hour, just like that last Microsoft trade we just seen. Right? Anti-FOMO. This is a anti-FOMO type strategy. You don't want to get FOMO because you're going to be buying low and you're going to be selling high. Right? So that's the entry criteria. What is the stop loss? We got our bullish candle. Let's say I got a crazy imagination, y'all. So let's just say we had a target at 390.50. Let's say our candle came back and retested and it closed right there at, let's give it a little bit more. It closed at 398, 389.28. I can't read today, can I? 389.28. And let's say the bottom of the candle was right here at 389.03. Right? So if we had another key level right here, key level or high of day, key level or high of day, right? Retest here. We're risking 25 cents to possibly make $1.22. It's a 4.88 risk to reward ratio. Now let's move this down. Let's say, this is a good example right here. I like this. So let's say that you don't really know, you're not comfortable with using levels yet, and you want to use the high of day for a retest. Let's say you use, this is something else you do. Let's say you use the pre-market high. Cool. If you use the pre-market high as your key level, right? And then you use high of day as your target. Let's say, let's zoom in. Let's say pre-market high, 389.1. High of day is at 389.38. Cool. It came up. It gave you a retest candle right here. And the candle closed all the way up here at 389.27. Now, your risk reward ratio is a 0.44. Would you want to take that trade? Could it keep going past that high of day? Yes. But this is a super, it's a super like, it's a system, right? You're using the levels as the targets. You have to be very precise with your levels and you have to stick to your levels. So remember, we want a risk to reward ratio of at least a 2, bare minimum. You're risking 25 cents to make 11 cents if this candle closed right here. Now, if this candle would have retested and closed right here, you see how that risk to reward ratio has skewed in your favor. So it matters. It matters a lot where this retest candle closes. If this retest candle closes all the way up here, you're targeting high of day, you only got 15 cents to go. Not saying it can't go past that, but if you're using this system, that's what it looks like, you know? Whereas if this recandle, the candle retested and closed here, now you have a 2. It's more worth it, right? So I we're gonna have to do some more live trading with that, but I think I recorded that video. I think it's on my Instagram page of the live trade for that Microsoft play. That live trade is on my Instagram if you need to kind of watch that. It should be near the top. We got a lot of videos, but it should be near the top. All right, so it's been about an hour, so let's open it up for questions, um, comments. If you got a question, you can type it in the chat or you can raise your hand. I can take you off mute. I hope this made some sense, man. I be rambling a lot of times, but raise your hand or drop your question in the chat. What time frame would you look for a retest? Great question. The time frame you want to look for a retest is the 5 minute. That's the one I suggest. That's the one I use. The 5 minute. Now that's when you're day trading. Now let me throw another wrench in there real quick for y'all. You use this exact same strategy if you swing trade. I mean, you're doing nothing, but you're not doing anything except changing the time frame, right? So very quickly, let me show y'all something, right? Dang, I be rambling, man. Y'all make me ramble all night. I gotta get off here. But let me show y'all this. This is a perfect example right here, right? So we're gonna use just a few things. We're gonna use levels. We're gonna use candlesticks. We're gonna use volume. Let's take a look. Look at this Tesla right here. So we caught this Tesla play right here. A lot of y'all caught this with me, this Tesla play. Cool. But where did I tell y'all it was gonna break out from? 226 right here. This was the key level on the daily. Don't chase the up move. Now this is for swingers, swing traders. Don't chase the up move. Let it retest. Let's look, see what happens. That was a 5-minute level, so I can take that off. Look at this retest count, this retest candle here. This from the 4 hours, so this for people that swinging. 4 hour retest right here. Let's say you got in here. Okay, so your stop loss, you have a pretty big stop loss if you didn't catch it a little bit earlier. So preferably you want to catch this a little bit earlier than the close here. But you got your retest, right? So your stop loss, your stop loss could be if it holds below this level right here that was holding for the past few days. Or if you want to be more risky, you can say, okay, as long as it's not breaking below 226, this thing can keep going, right? What could your target be? Target could be to the upside here, or you can have it where I had my key level at. My key level was right there at 241. Retested here, came and hit the level again. I mean, it works the exact same way. It doesn't matter the time frame. As long as you understand, the system, that is all you need. You have to understand the system. What type of contract are you getting for these 0 days? When I'm day trading, I'm usually day trading weeklies. I don't trade a lot of 0 days. I just want some 0 days into today. But I usually, when I'm trading spot, I'm getting 1 or 2 day expirations on buying weekly. So a lot of times I'm getting weeklies, but I usually stay away from 0 days. Had to step away. Did you cover how to set and move a stop loss? Yeah. So I mean that was just, so check this out. So if you was to do this right here, let's say, all right, so let's say for instance here, let's say you would have got in here, cool, and you would have set your stop loss if you would have got under this point, which this risk to reward wasn't great, but it was a lot better, if you would have caught it before it went up $10, right? So let's say if you would have caught it down here, your stop loss would have been up here. And even if you use, however you was using it here, show you how to set the stop loss. So if you know your stop loss is right under here, right? All you have to do is go to your whatever platform you use. So I don't know if you use, like TradingView to trade, or if you use Webull or Thinkorswim, you would set your alerts or you would set an order. So you want to set a market condition to sell your contract if it gets to this point. So here's ways that you can set your contracts using market condition to sell automatically when it gets to a certain point. So that's literally all you would do. You got Miss Donna here. Let's see if I can. I'm trying to bring you up. I don't know if it's working.
Can you hear me?
Yes, ma'am. I can hear you.
Yeah, like just real quick, I just want to thank you because for the retest candle, which you clarified for me, I always thought that it had to be like the opposite color. You know what I'm saying? So like if we're going up, I thought the retest had to be like a red candle. And if we're going down, I thought the retest candle had to be green. I just wanted to say thank you for clearing that up for me.
Oh yeah, no problem. Yep, it's always just important to understand the wick. The candle,
Mhm.
it could be red and be a super bullish candle. It just depends on that wick. So for sure.
But you clarified it for me, so thank you so much.
Oh yes, ma'am. No problem. No problem at all. All right. Can you go over supply and demand? What helps you identify each zone? Um, so I'm not a supply and demand expert. I can tell you what I use like really quickly though. So I'm not the expert on supply and demand, but how I use it, it can be used as targets as well. And this is typically when I like to do another type of strategy, which we'll have to do another session. But for supply and demand, I'm looking for the big down moves and the big up moves. So a up move like this or a down move like this, it had to start somewhere, right? So you're looking for where did this thing start? And if we look for this down move, where did this thing start? We actually had two down moves. So a area which could be used as the supply is literally where it starts. So if I can find here, this down move was started right here. So this is just telling you that when price gets back in here, there were sellers that made this move right here happen that are still sitting here because orders that are unfilled up here. Um, and it works the same way to the downside. You're looking for that first opposite colored candle before the move. So this was the up move here. Opposite color candle right here. The buyers are right here. And literally, if you trade supply and demand, you're literally already doing break and retest. Essentially, that's what you're doing because you're looking to buy in demand. You're looking to sell at supply, right? So this could be, let's say that you didn't even have the level. If you're doing like supply and demand, you're doing the exact same thing. You're trying to buy it in here where it already was established, and you're looking to sell where the sellers were already established. So you're already using that without even knowing that you're doing it. So if you do supply and demand, this strategy it'll be easy for you to understand once you make that connection. I promise you, a lot of this stuff in trading, it runs together. A lot of stuff runs together. It's just so many strategies that it takes a while to understand what you like to do. I've been doing this for 4 years, and I constantly add stuff to my game. I didn't start using not support resist, but I didn't start using supply and demand until this year. I've been trading for 4 years. So I learned how to incorporate that. So you're always going to be progressing. Never think that you're going to get to a point in trading where, oh, it's nothing else for me to learn. It's always something for you to learn. Because if you take a week off of trading, the market is going to look completely different than how it did last week. It's always things to add to your game. Something else I added to my game. This year, Ripster Clouds for day trade. I wasn't using that before this year, right? So always keep learning. It's great to learn new things because that's gonna let you know what you like to do. Just simply how I was able to tell you guys about, like trading chart patterns and the downsides of trading chart patterns. The downside of trading chart patterns is the stop loss. That's the biggest thing. Because when you're talking about patterns, and this me, you know, the session is over. This is just me rambling now. So let me stop